Are you following retirement advice that could actually destroy your financial future? Let's bust two of the biggest myths, otherwise known as lies, that could leave you broke in retirement and show you what actually works. In this video, you'll learn why the 8% withdrawal rule could devastate your savings, the truth about how much you really need to retire, and the latest, safest strategies for making your money last. Hi, my name is Tommy Cloud. I run a wealth management firm. We help people all over the country that have suddenly received a large sum of money in one form or another. Let's start with myth number one, the 8% withdrawal rule. You might have heard that you can safely take out 8% of your retirement savings every year. This advice is everywhere, but here's the truth. The 8% rule is based on the idea that the stock market always gives you 12% returns. In reality, the long-term average is closer to 10.7%. And I think it's going to be even lower than that over the next 5 years because the previous 5 years have been so good. And by the way, that's 10.7% per year average is before fees and taxes. More importantly, this rule ignores something called sequence of returns risk. If the market drops early in your retirement, you could run out of money much faster, even if things recover later. And that's why I mentioned the performance over the next 5 years now from 2025 to 2030. Stock market has had an excellent previous 5 years, well over 13% per year, even with the 2022 drop. Plus, you have investment fees and taxes that eat into your returns, making 8% withdrawals even riskier. So what's safer? Let's talk about the solution. The 4% rule, based on decades of research, is much more reliable, but even that's being updated. In 2024, experts recommend starting with a 3.7% withdrawal rate for a balanced portfolio. This gives you a 90% chance your money will last 30 years. I want to pause here for a second and make this very clear. These are all for just like stock and bond portfolios. You can create your own diversified portfolio with non-correlated assets, and it gives you the flexibility to take out a lot more. So everything I'm talking about right now is for your traditional 60-40, and all those portfolios are just global stocks and global bonds, which really is not true diversification. It doesn't involve the other non-correlated asset classes that we've talked about in here. For example, real estate, gold, and crypto, where you can invest in those to have a much smoother ride and not have to worry about sequence as returns as much. It also allows you to take out quite a bit more than if you just simply have a global stocks and global bond portfolio. But let's go back to our example of the 3.7% withdrawal rate for a balanced portfolio of stocks and bonds. If you have 1 million saved, a 3.7% withdrawal rate means you take out about $37,000 in your first year, then adjust for inflation. Now, myth number two, you need 5 million to retire. Some experts say you need 5 to 10 million to retire early. That sounds scary, and for most people, it's just not realistic. We've talked about this in other videos where they talked about you had to have 8 times income and all these different targets that they set. And really, it just puts needless pressure on you that you, quite frankly, don't need to live up to. If everybody had to save up $5 million before they retired in today's dollars, most people would never, ever retire. Almost everyone would never retire. The truth is that retirement is about hitting a magic number. It's about having a plan that fits your lifestyle, spending, and goals. If you know your number is not going to be that big that you're going to hit, you need to ratchet down that lifestyle. There's many ways to do that. Many people retire comfortably with much less as long as they manage their spending, invest wisely, and adjust for taxes and inflation. What matters the most? Number one, your personal plan, how much you spend when you retire and how much you invest. Plain and simple. It's the old adage of don't live above your means. Flexibility is number two, adjusting your withdrawals if the market changes. And number three, of course, is having a solid tax strategy, using the right accounts and timing your withdrawals to keep more of your money. Don't let popular myths derail your retirement dreams. The safest path is a personalized plan based on real data, not one-size-fits-all rules. Are you ready to take control of your finance? Click the link to take the How Much Do I Need to Retire quiz or apply for a free sudden wealth planning session with me. It's a 20-minute call or a meeting on Zoom. I do them with people all over the country, and there's no cost, there's no obligation, there's no hard sell, and you can go ahead and we'll get you a custom roadmap. We'll see where you are now, where you want to go, and I'll talk to you about what's been working for my clients. Go ahead and subscribe for more evidence-based retirement strategies. Don't just hope for a good retirement. Plan for it with facts on your side. The best retirement plan is the one that fits you, not what a headline says. Stay curious, stay informed, and make your money, really God's money, you're really a steward of it, work smarter for your future. And we'll see you in the next video.